Oh, welcome into a daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, I want to start off by looking at the GDX chart and more on a short-term basis, although we will take a step back and look a bit more longer term. But just a couple quick comments regarding the top that we had in GDX right after the start of September. So September 4th, GDX topped out at 30.96, and then it worked its way lower, lower highs and lower lows until November 12th when it bottomed at 25.98. Ever since then, I think you can make the argument that it is starting at least a short-term uptrend with a couple higher highs and a couple higher lows. What do you think about that low on November 12th, just below 26? Do you think that's going to be a pretty strong low here for GDX?
Well, of course, obviously in time we will know for certain, but if I had to guess one way or another, I do think the lows are in for GDX and GDXJ. I mean, as I said the last time, GDX has bounced off 26 three times, and for GDXJ, I believe it's 36, which it has bounced off of like six times in the last couple months. And of course, in addition to that, the advanced decline line for GDX has been really strong. The miners have been outperforming the metals. So we have all those things. Those things are very encouraging. What I'm looking at, Corey, as far as the short-term technicals, for GDX, you can draw a little downtrend line. You can go to the first October high, which is just above 28. And so you draw that line to where we are now. And you can see, including that early October peak, there's three peaks. And so we can call the last one, I think a week or so ago, just at 28. So that December high for the miners in these various ETFs, I think that's going to be resistance. Like if we would get a move above that level in GDX and GDXJ, and we close above that on a weekly basis, that would be really encouraging and tell me that, we'd have a chance to rally up to the September high. If we stay below those areas, there's more work that has to be done. And so right now, I'm not exactly sure which way it's going to go. Obviously, it's Fed day today, and, they can say anything and the market can react one way or another. It's interesting, Corey, because I'm so encouraged by what I'm seeing in the miners. And I think they are going to move towards a breakout eventually and soon enough. It's just a question of how the rest of this correction or consolidation will play out. And so one thing I'm thinking about is the metals. And, I think that once the metals are done with their correction, that's when we will see the miners like really begin that move higher, first and foremost towards the September highs. Where we are here and now, it's difficult to say. I mean, it could be imminent. They could break above. The Fed could say something positive, and the market could bid gold stocks, above that little December resistance, and they could have a year-end rally, or no matter what happens, the market could react kind of negatively, and we do have high net spec positions in gold, and so we could see some weakness there, and that will kind of keep the miners contained. But long story short, Corey, I do think the miners have bottomed, and so we do want to be buyers on weakness.
Okay. Well, you know what? We're recording this before we are hearing from the Fed and the press conference, but either way, it does look like GDX has put in at least that little bottom and could trend a bit higher. Yeah, there could be some weakness, though. There will be some day-to-day weakness, but fact of the matter is, very encouraging year so far for the metals and even the metals stocks, especially recently. I don't think the metal stocks have sold off very hard at all when you consider the downtrend that the metals, gold and silver, have been in. But you did also say that you think that the stocks will really take off when kind of the downtrending metals end. What are some of those levels you're watching for? Where do you see support for gold and even correlated to silver?
Yeah, good question, Corey. Well, taking a second look at gold, because I just assume, we're in a correction and gold's probably going to come back to maybe even 1380 or 1400. And I mean, I guess that's still possible, although the miners are telling you that's very unlikely to happen. However, looking at the chart of gold, we have the 200-day moving average is now at 1408, and that's rising. So that's going to keep climbing. You keep that in mind. Also, looking at just the daily chart of gold, the next support level, if it were to go lower than in the 1440s, would probably be 1420 or slightly below. And Corey, if you look at the 2018 low and you run that up to the peak, the 38% retracement from that is around 1410 to 1450, somewhere in there. And if you would look at the low this year, the May low, and you run that up to the peak, the 50% retracement of that is right at the same area, call it 1412 or 1415. So you have those two Fibonacci points right in there. You also have the 200-day, which is, again, 1408, and that's rising. That could be 1420 in another month. So you have all those levels, and then just the pure price action, where if we were to go lower, the next support looks to be around 1420. So if gold were to move lower, those are the levels that I would be looking at. And with respect to silver, silver also has a strong confluence of support in the low 16, so just above 1600. So if we were to see the metals, sell off after the Fed and weaken for whatever reason and start to correct a little bit more, those are the levels I would be looking at as far as potential lows for this correction in gold and silver. But it's interesting, Corey, because there is a clear divergence there. The miners are definitely looking better than the metals, and that's a good thing. But ironically, in my opinion, I don't think we're going to see the miners really start to move higher and take off until after the metals have bottomed. So we are seeing good relative strength in the miners, but if that continues, just imagine where they can go once the metals are done with this correction.
Well, to also circle back around to what we chatted about on the weekend show is just how encouraged you are about next year for the precious metals. So if anybody missed that, be sure to check out or re-listen even to that interview on the weekend show. One other thing to consider out of the stocks too is some of the good news that we've seen in terms of M&A and also some of these much larger bought deal financings. It's been a long time since we've seen both of these two very bullish factors come together. Now, one other chart that you are watching that you brought up to me is an equal weight commodity index. GCC is what we're looking at here. Now, this equal weight commodity index has been under a fair bit of pressure, but that's when you take into account just how much energy has struggled, just how much base metals have been struggling. Really, the only commodities that have been running strongly were the precious metals because of, I think, the fear that's come into the market. But what are you seeing in the equal weight commodity index chart here?
Well, what I'm seeing, and someone posted this on Twitter, so I wasn't the one who came up with this, but if you're looking at just a downtrend from looks like late 2018, there's a little downtrend there. The equal weight basket has broken above that. So this has had a pretty good move since the summer. It hasn't corrected that much. I mean, it looks like bullish action. It's holding those recent gains. It's back above the 200-day moving average. The 200-day moving average is flat, so I like to see that. It'll probably start sloping higher at some point. So this is something to keep our eye on, Corey. I think if it could just move a tiny bit higher, then it would be close to maybe like an 8-month high. So it's not quite at a 52-week high. But Corey, you think about that. You also think about the ETF XME, as in Xavier, Mary, Edward. That's also doing really well. Gold and silver stocks play a part in that, but that's kind of more, we looked at it. There's some steel stocks in there. So that's more commodity stocks, but it's not a perfect representation. But, that's getting a bid. So I like how things are setting up with respect to the XME and the CCI and commodity prices. And so this could be a hint that we're going to see more inflation happen in 2020. And again, Corey, I don't know what the fundamental driver, of this big move in gold stocks will be. It could be higher inflation, like the market is saying. Maybe we can start to see that, or maybe even the Fed wants to do another rate cut or two. Here's the thing. either way, I think gold stocks are going to break out, and that's why they're holding up so well. They're holding their gains. Same thing can probably be said with the metals, although they're not quite as strong. So either fundamental development is going to be bullish for precious metals. But look, the fact that we're seeing an equal weight basket of commodity prices show some strength, break a downtrend line, that's encouraging. It's not obviously the best thing for precious metals, but it's still a bullish development for precious metals. So we like to see that. And, who knows, Corey, it could turn out to be a really good year for the entire commodity space and not just precious metals. So that is definitely something to keep an eye on.
Now, the whole commodity index potentially bottoming here, that, and this might be a jump, really speaks to me that maybe we will see some actual inflation come into the system. We have had some Fed comments that were saying, they want inflation to run even above their 2% level, to average out when it was below 2%. Maybe the commodities are finally telling us this. Hard to actually know, but overall, we are going to get maybe some insights into what the Fed is thinking, but again, this is, I think, going to be kind of a non-event meeting. No doubt we will see some volatility on the back end of this. But overall, it still sounds like you are very encouraged moving into next year. You think next year will be good, especially for the precious metal stocks. We might just need a little bit of time for bottoming in some of these metals prices. Jordan, good chatting with you. I am going to post a link to your website, The Daily Gold, so everyone can follow along with what your technicals are telling you. Thanks for your time, Jordan.